Hello, everybody, and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. My name is Jesse Day. Before we get started, as always, nothing here is investing advice. Do your own due diligence. And today's guest is the CEO of UR Energy, a company engaged in uranium recovery and processing operations, as well as the exploration and development of uranium mineral properties in Wyoming. It's Mr. John Cash. Great to have you on the show.
Hey, thanks, Jesse. It's good to be on with you.
Yeah, happy to have you here. And I want to get started, like I do with all new guests, with the origin story. So, how did you first discover uranium, and how did that ultimately lead you to becoming the CEO of UR Energy?
Yeah, no, it started in college a long time ago while I was working on my undergrad and then my master's degree in geology, geophysics. I was approached by a couple of the majors at different times to do some contract work, doing some exploration work, looking for uranium. And so I needed a summer job, also a little work during class time. And so I took them up on that. I worked in a core shack, cutting core and logging core, looking for uranium. So started off in college, really had no intention of continuing on necessarily with the uranium commodity. But once I graduated, was able to get on as a contract geologist with one of the majors, again, doing uranium exploration. That continued for a few years and just evolved from there. And for better or worse, uranium is the only commodity I've ever worked in.
Well, that's actually great. That's what we want to see from a uranium company's CEO. And I want to start when it comes to the uranium discussion with the spot price, because it has been rising pretty steadily recently to where it currently sits at around $58. I had Mike Alkin on recently, and he was also saying that on his end, he's seeing the floor and ceiling price for long-term contracts also moving up. So, could you tell us, as much as you're able, what you are seeing in your own conversations with utilities regarding pricing?
Yeah, and that question is very timely because just a couple of weeks ago, we attended the World Nuclear Fuel Markets Conference in Slovenia. Had a very good meeting there. Love the country, beautiful place. So my hat's off to the host country. They did a great job for us, and would love to go back there again someday on vacation. But the meetings we had were very productive. I would say that both European and U.S. utilities and other fuel buyers, traders, are increasingly interested in diversifying their fuel supply. Not that they're necessarily moving away from Kazakhstan or Uzbekistan or Russia, but they're looking for alternatives and they're getting more serious in those conversations. So the meetings that we had were not, I would just say, platitudes and, hey, how you doing? How's the weather? They were more serious in nature than what we've seen in past conferences, where they're very sincere in exploring opportunities, especially North American opportunities where you've got great jurisdictions that support uranium mining, Canada and the U.S. in particular. So very meaningful conversations. I would say, too, that the structure of deals that are being discussed is evolving, not just the price, but the structure of those deals. I think everyone recognizes now that inflation needs to be a part of the equation. It needs to be a part of how pricing is calculated going forward. And it's becoming more of a seller's market than a buyer's market. And the sellers want that protection. So that's a part of the conversation. So price, market related versus base escalated. I think that's changing. I think more and more utilities are moving away from a preference of base with an escalator to something that's more market related with floors and ceilings. Not all of the utilities prefer that, but there seems to be a move in that direction. Again, there's a recognition that it's a seller's market moving into that arena, and the sellers want that exposure to the market. So utilities say, hey, if we're going to play ball in this market, we have to listen to the sellers and take the terms that they want. So yeah, things are looking better and better all the time for contracting. And so we'll see if those conversations we had in Slovenia begin to bear fruit for UR Energy. I believe they will, becoming increasingly optimistic.
Great information there. I want to shift to the acceptance of nuclear energy around the world. It continues to proliferate, and now EU countries have backed more allowances for nuclear energy. I want to read you a passage from the Financial Times, a Financial Times article on June 16th. It said Germany, Austria, and Luxembourg were among member states who had opposed recognizing low carbon energy sources such as nuclear in the EU's rules on renewable energy. But France's threat to block approval of the EU's renewable energy targets forced the European Commission to put forward an additional declaration that acknowledges the role of nuclear, which Germany finally backed. If you were to tell me Germany was going to back anything to do with nuclear energy here in 2023, I'd be quite shocked, obviously under duress, but it looks like things are moving in a positive direction there. So what are your thoughts on this development?
Yeah, I'm really glad that France was able to prevail on that. So that's going to be meaningful for Europe going forward so that they can invest more heavily in nuclear. Of course, they're still going to be moving toward renewables and away from fossil fuels. So no surprise there. Unfortunately, Germany seems to keep stubbing their toe when it comes to nuclear, and there's a consequence to be paid for that. Their energy costs are extremely high, not as reliable as they would need to be for an industrial country, and hopefully eventually they will reverse course on that, them and Austria as well. But beyond those countries, we're continuing to see increased acceptance of nuclear around the world, and in Europe. England, for example, they're moving more aggressively toward nuclear power. France had kind of stagnated on their support of nuclear, but that's been reversed, and they're looking at extending the life of their reactors, looking at building more reactors going forward. Finland is a part of that story. Go into Asia, South Korea, again, the kind of, in some regards, much like France, the program had kind of stagnated and they were moving toward a slow phase out. But South Korea has reversed that. So it looks like they're going to be keeping reactors on, extending life expectancies on those. And very importantly, they used to be a large exporter of technology for reactor buildouts, and they're going to re-enter that market. So they'll be expanding that technology around the world, building reactors going forward. So, I mean, that's a list of just a few countries that are really expanding that footprint in the nuclear space. And yeah, the acceptance is growing rapidly. It's really born out of, I think, two factors. Number one, and primarily, it's green energy, reliable, baseload green energy. And the world is recognizing that while renewables have their place, renewables very often are not reliable base load. And nuclear is really the only carbon-free source of base load that's available out there. I guess you could point to hydro, but pretty much all the dams that can be built have been built, and there's an environmental consequence to those dams. And so people are migrating more and more toward nuclear. But the other issue that's really driving this, especially after Russia invaded Ukraine, is countries are looking for ways to have more internal energy so they have that security. They're not reliant on other countries for oil and gas, coal, fossil fuels for that energy. And nuclear is a great way to do that. I mean, yeah, you might have to buy fuel from other countries, but that fuel is a very low cost for operations. Right now, it's available and you can store it for a long term, and it's safe, it's secure. So countries like that security, that energy security. They don't want to be reliant on others, especially Russian natural gas is a prime example of that. And so for those two reasons, we continue to see just a tremendous growth in appreciation for nuclear energy, and countries around the world are moving toward it.
Well, I want to continue on that thread you brought up regarding domestic production because there's been a clear shift from political leaders in the US to get away from Russian uranium and encourage domestic production. Russia supplied around 11% of the uranium purchased by US nuclear operators in 2022, and sanctions are currently being considered. So, how big of an impact do you think sanctions could have? How soon do you think that would be realistic to implement? And what does this mean for domestic uranium production in the US?
Yeah, it's an interesting question. When Russia first invaded Ukraine, I thought, here we go. This is going to have a dramatic impact on pricing. Very quickly, the U.S. government will sanction Russia. But that didn't happen initially. And it didn't happen because we are so reliant on Russian processing of uranium, not mining, but processing, the conversion and enrichment services. So cutting that off would have been very difficult for the utilities here in the U.S., and Congress didn't want that. So the utilities were quite successful in lobbying against any sanctions. But as the war has been grinding on, I think the reality is setting in that there does need to be a sanction here to cut off that supply. I think even most utilities would agree with that now, that we can't continue to be reliant on Russia. They've become a pariah internationally, and we shouldn't be relying on them in any way, shape, or form. We should do everything we can to effectively end this war with Ukraine. And one way to, or one small step toward that, is to stop buying product from them, including processed uranium. So you probably are aware that both the House and the Senate here in the U.S. Subcommittees have passed legislation to move forward to the full House and the full Senate for consideration. Right now, the way those bills are written is it would be effectively an immediate cutoff of enriched product coming from Russia into the U.S. There would be a kind of an exemption process, if you will, so that if a U.S. utility couldn't get pounds somewhere else or enriched material somewhere else, that they could approach the Department of Energy and get an exemption so that they could go to Russia. Um, I don't think that exemption process or waiver process is going to work very well. I think the day that we cut that supply off, Vladimir Putin, if we go back to him and say, "Oh, we were just kidding. We need pounds. We need resources," he's going to say, "No, thank you. You've already cut it off. You fired the first volley in that sanction. We're not going to supply that material." So, but right now the process is both the full House and the full Senate need to consider those bills. Our understanding is it will likely be this fall before they're considered, but the likelihood of that passing, I think, is increasing by the day. One issue in particular that does need to be overcome is some members of Congress believes that there needs to be funding in the U.S. to stand up additional enrichment and conversion capacity, so that if there is a supply cutoff, that we can supply that internally. And so I think that's a point of discussion right now in the halls of Congress, and we'll see how that goes if Congress is willing to support that. But we are seeing increasing support across the political aisles, both Republicans and Democrats, when it comes to all things nuclear. Again, for those two reasons I mentioned earlier, it's good baseload, CO2 free energy. And so the Democrats love that. The environmental arm of the Democratic Party loves that. And then when you look at energy security, which is kind of more along what the Republicans are looking at, they really support nuclear for its security implications. So those two political parties that don't agree on hardly anything, they do agree when it comes to nuclear power in large part. And so we're seeing great support there across the aisle. Two of our champions, if you will, Manchin is a great supporter. He's a Democrat. And of course, Senator Barrasso from here in Wyoming, my home state, is a tremendous supporter as well. And they're working very closely with each other to resolve a number of these issues. So much more to come on that. We'll see how things play out this fall in the halls of Congress. But I think right now sanctions are likely. You'd also asked about the impact on pricing. It's important, those Russian pounds, the Russian resources. And if those are cut off, I think we see an increase in the price of uranium conversion and enrichment services. But do I see it as a big windfall for uranium miners? No, I don't. I think it results in probably a few dollars a pound, which, hey, we will take. We're already profitable at today's prices. And so we'll take a few more dollars a pound. We appreciate that. But I think the bigger issue is if Kazakh pounds, which are primary mine production, if those are implicated in any way. Kazakhstan represents about 46% of global supply. They like to say that they're independent of Russia, and in many respects they are. However, we have to recognize and appreciate that Russia has ownership, at least partial ownership, of a number of significant projects, uranium projects in Kazakhstan. So to some degree, they control production and where those pounds go. And they've been growing that influence. Very recently, Russia was able to acquire the Budenovskoye units 6 and 7, 49% of that project. That's important because that's a very large project. By 26, 27, in that time frame, it'll probably be the largest in situ mine in the world, and Russia now owns 49% of it. Beyond that, a lot of those pounds from Kazakhstan may be going to China. Kazatomprom recently announced a sales agreement with China. The details are a little bit short. Nonetheless, it does sound like a very significant sales contract. Potentially a very large percentage of their production will go to China. So I think utilities are growing increasingly concerned that that primary production out of Kazakhstan is not going west, but it's going to go east. And I think that's a legitimate concern. I think that is potentially a much larger driver on the market price than sanctions from Russia. So something we want to keep an eye on going forward. I know the utilities are watching that very closely.
Well, part and parcel with all that is the new strategic uranium reserve that the US government has started. And UR Energy was one of the companies selected by the US government to produce uranium to go into that reserve. So, could you talk to us about how that deal came about and how the process has been moving forward thus far?
Yeah. So the uranium reserve was a result of the nuclear fuel working group that was established by President Trump. And so Congress allocated $75 million dollars to essentially start a small stockpile of feedstock uranium and also conversion goes along with that. And so that spending of the $75 million, dollars, that was a one-time expenditure. They didn't buy from immediate production. They bought from inventories. And I think that was unfortunate. I think it would have been a much better program if they had incentivized new production. I think that would have strengthened U.S. capacities instead of buying inventories. But be that as it may, we were successful in bidding 100,000 pounds into that program. We got $64.47 a pound. We were paid for that this spring. So essentially $6.4 million that we received from that program. Beyond that program, we still have a great inventory at UR Energy of 224,000 pounds that we have produced ourselves, that we are holding in inventory essentially as a backstop as we ramp up commercial production. But we would love to see that uranium reserve program expanded and extended. Congress intermittently has had discussions about doing that. Right now, we're not betting the farm on that. I think Congress is very reluctant to spend any more money, especially on the House side. They're becoming more conservative fiscally with the Republicans in charge. And so I think to expect more funding in that program, I think would be a bit misplaced. Maybe it happens, maybe not. We'll support it. And we certainly would be happy to sell more pounds to the U.S. government in that program, hopefully not out of inventory, hopefully out of production, so we can strengthen our domestic capacity here in the U.S. to produce and convert uranium. So it was a great one-time program. Hopefully it expands, but we'll see. We're not terribly optimistic in that regard.
Well, I like that you're keeping a conservative viewpoint there. And I do want to dive into UR Energy, but first, I do want to discuss some new uranium funds that have come onto the market. You know, we've obviously had the Sprott Physical Uranium Trust. When it came onto the scene, it was quite a game changer. The spot price rose dramatically before coming back down. A lot of people point to Spot as the catalyst for that. And we've now seen a couple other funds emerge, one from Zuri Invest in Switzerland and also ANU Energy in Kazakhstan. I also, going back once again to my interview with Mike Alkin, he said he knows of some other ones that are currently in development as well. So how much of an impact do you think these new funds could make?
Yeah, there could be a tremendous impact. It's interesting to compare the different energy sources to each other and how large they are from the fuel supply side. If you look at oil and gas, that industry globally is probably worth trillions of dollars. So for anyone to develop a trading mechanism there where they buy that commodity and store it, for them to have an effect on the price of oil and gas, it's not going to happen. You'd have to raise hundreds of billions of dollars to have an impact. Conversely, you look at the uranium space where the global consumption is only around 170 million pounds per year. Compared to oil and gas, when you convert that into dollars, it's nothing. So for these relatively small funds to be set up, or trusts to be set up and raise $100 million or $500 million and take pounds out of the market with that, they can have a real impact on the price of uranium. And certainly Sprott has. I mean, they play in the short-term market, the spot market, not the long-term market, but it is a buy and hold trust. So they are effectively raising money, buying pounds, and taking it out of the market. And there's a very limited supply in a very small market. So they are able to have a profound impact on pricing. And what we're seeing is that the supply of material that's not nailed down, the material that's mobile, is being diminished every time Sprott goes out and buys pounds. So as these other players move in, ANU and Zuri, they raise 50 million, 100 million. I believe ANU is looking at raising 400 million. And as they deploy that capital, it can have a real impact on the spot market because there's so few pounds out there to be absorbed. It's important to note that only about 15% of the market trades in the spot. The other 85% trades in long-term contracts. So we have to acknowledge that. But nonetheless, the spot price often is a precursor to the long-term price. And as those pounds get mopped up, those pounds are not available anymore, especially when they go into a one-way trust like Sprott has set up. So I think we're going to continue to see more pressure on the market from those various mechanisms that are being set up, the various funds. And I think others will jump in. I think they're going to see that, yeah, this is a small market. We can impact it and we can drive prices up simply by raising a few $100 million, which is a very tenable proposition. So they are important, and I think they're going to be increasingly important going forward.
Well, let's shift to discussing UR Energy now. And maybe let's start with, for those who are unfamiliar with the company, giving us the 10,000-foot overview.
Yeah, absolutely. So UR Energy, we are a publicly traded company. We are a pure play uranium company. We do mining, development, exploration. We've been around for quite some time, and we started production at our Lost Creek property in central Wyoming back in August of 2013. So a little bit about the structure of the company. We do trade on the TSX, the Toronto Exchange, under URE, and we trade on the NYSE American under URE. So we do trade on those two exchanges. Our shares are very liquid. We've been trading around 1.3 million shares a day. That's been increasing as more and more interest has been growing in the uranium space. So we're very liquid. Market cap is around $280 million US. But going back to our projects, we have two flagship properties that we like to talk about. Lost Creek, as I mentioned, has been in production since 2013. We've produced nearly 3 million pounds of uranium. In December of last year, we announced that we were going to re-ramp production back up to commercial levels. And over the last few weeks, we've been doing that. And we now have very good flow coming from Header House 2-4. Our head grade is increasing as we begin to see breakthrough in the formation. And in the coming weeks, we'll be having pounds come out the back end of the plant. We have a second property that is fully permitted that we've not constructed out yet, but we have all the permits in hand to be able to do that. And that's called Shirley Basin. And so it's also in south central Wyoming. And we could build it out for about $35 million, including the satellite plant and the initial mine units, and ramp it up for that amount of capital. So the cost is relatively low, and that's because the ore body is very shallow, and we would only build out a satellite facility, which is a relatively small building. And then we would ship the loaded resins of the product over to our Lost Creek mine for final processing. So that really helps us reduce the capital rate there. So $35 million to build it out. We could build it out in about 18 to 24 months. That includes the ramp up period as well. So that could happen very quickly. But we're a very conservatively run company. We typically don't sell into the spot market. We like the certainty of long-term contracts. We've announced that we have entered into two long-term contracts that total 600,000 pounds a year. They are well in the money on an all-in company basis, not just mine site, but that includes corporate overhead as well. So we're very pleased with those contracts. And as I mentioned, we're in discussions with other utilities, other fuel buyers to try to expand that contract base. And we're optimistic that between now and the end of the year, we'll be able to do that. So that's our story really is we are a producer. We're a low cost producer. Our mine site costs back in 2017, 16 in that era, they were around $16 a pound. If you throw in the all-in mine site cost, they were around $33 a pound. We're not going to get back to those levels today because of inflation, but we believe we can be pretty close. So we've done an economic analysis on that we put out in September of last year that incorporated inflation. And so if we add a few dollars to those, we believe that's the kind of the realm we can get back into. So for Lost Creek, the all-in mine site cost, we're looking at $36, $38 a pound, somewhere in that area. We believe Shirley Basin will be a little bit cheaper because it is such a shallow ore body and a lot of the infrastructure is already there. So we're extremely well cashed up. We've got at our last report, we had 73 million US in cash. In addition to that, I already mentioned we've got about 250,000 pounds of inventory that we could cash out within a week or two and convert that over into some additional funds if and when we needed to. But it's not our intent to do that at this time. So that's us in a nutshell. Just a value player in the uranium space, mining uranium and ramping back up into commercial production.
Great overview of the company. I'd like to get your thoughts on Wyoming as a jurisdiction. I've heard a lot of great things about Wyoming as a mining jurisdiction. How have you found it operating there? What are the advantages of operating in Wyoming? And how is your relationship with the government and the local community?
Yeah, Wyoming, you have to recognize it is a resource recovery state. So nearly the entire population works oil and gas, coal mining, trona mining, uranium, or if they're not in those industries, they're in agriculture or they're in businesses that support those industries. So the people of Wyoming and the regulators, they understand resource recovery. The regulations are in place and they have been in place for decades, and the regulators have been in place for decades. So they're experienced. They know what they're doing. And I should point out that the Nuclear Regulatory Commission used to have jurisdiction over uranium production in Wyoming. But just a few years ago, the state of Wyoming said, hey, we would like to take over that authority. There's a mechanism under the Atomic Energy Act that allowed the state to take over that jurisdiction. So now the state of Wyoming has sole jurisdiction over the source and byproduct mining activities associated with uranium mining. So that was a great move. Now, if we want to have a meeting with a regulator, we don't have to fly all the way to Washington, D.C. I can jump in my car and in 2 hours, I can be sitting across the desk from our primary regulator. So that's great. So we've got great support with state government. Local communities are also incredibly supportive. They know that their income comes from severance and ad valorem taxes, property taxes that are largely paid by the mineral recovery industry in Wyoming. In Wyoming, there is no income tax, personal income tax. So everything that goes into the schools and the roads and all of that, it comes from the mining industry primarily, and people recognize that, and the governments recognize that as well. But very locally around our mines, the ranchers that we have as neighbors are very supportive, both at Shirley Basin, also over at Lost Creek. Both of those sites are pretty remote. We have very few neighbors, and we maintain excellent relationships with those. So Wyoming is a great place to work here in the U.S. From pretty much every angle that you look at it.
So could you lay out some next steps for UR Energy? You mentioned that Lost Creek, you're obviously ramping up production. Shirley Basin, you're looking to potentially bring online. When could that happen, specifically with Shirley Basin starting to produce uranium? And maybe any other notable plans you have here in 2023 and moving forward?
Yeah, primarily we're focused right now on ramping up Lost Creek, but we're also looking very carefully at contracting out at Shirley Basin. So as we layer in additional sales contracts, if we can be successful there and we fill up the book at Lost Creek, then we'll transition over to Shirley Basin, and that will be our cue to go ahead and build out Shirley Basin and put it into production. So really that's what we're looking at in 2023, ramping up, signing more contracts to justify more build out over at Shirley Basin.
Great. Well, thank you so much for joining us today, John. I'll put a link to the UR Energy website in the description for anybody who wants to check it out. And before I let you go, do you have any final words you'd like to share about the company and the uranium market?
Yeah, UR Energy, we are a value play in the space. We're very conservatively run, very clean story with limited liabilities, great cash, a lot of experience putting pounds in the can. And that's really what separates us from a lot of our peers in the US and globally. So, if investors are looking for a value play in the space, we would suggest they check us out and don't hesitate to reach out if they have any questions.
Great. Well, thank you once again for joining us, John, and sharing your knowledge on both uranium and UR Energy with our audience.
Well, thank you, Jesse. It's been fun.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.